Welcome to Alpha Insights. I'm Sarah. Today we're digging into the cannabis sector. The picture is mixed, and we brought in Josh to help make sense of it. Remember, if you have questions as we go, you can ask us at stockalpha.ai.
Thanks, Sarah. Good to be here. The short version: Canada showed surprising strength in retail sales, while parts of the U.S. market are cooling and state policy moves are adding uncertainty for operators.
Quick housekeeping. U.S. markets are closed today. The last trading day was Friday, February 20th, and trading resumes Monday, February 23rd. Okay, Josh, let's start with Canada. What happened there?
Canada reported retail cannabis sales for December of about 503.7 million Canadian dollars, which was up about 5% from November. That set a new monthly record, and it tells you consumer spending in the regulated market still has some momentum.
So, why should investors care about a single record month? Is it noise or something bigger?
Good question. One strong month isn't a trend by itself, but it matters because Canada is a large, fully regulated market, and this shows demand can surprise to the upside. For multinationals and exporters, that supports revenue guidance and helps margins when volumes climb. It also gives a contrast to what's happening in the U.S., where state-by-state dynamics are less consistent.
Right.
And to add to that, companies exposed to Canada often have more predictable retail math, which can be a stabilizer in a portfolio.
Now, Michigan grabbed headlines for the wrong reasons. Walk me through the numbers and why they're worrying.
Michigan's total cannabis sales for January were about $226.8 million, down about 8% year over year and down about 16% from December. Medical sales were especially weak, plunging to around $400,000 for the period we saw, which is roughly a 43% drop year over year. That's meaningful because Michigan is a large market. When volumes fall like that, you start asking if it's pricing pressure, too much inventory, or a shift in where consumers buy.
So is this a temporary hiccup or a structural problem?
I mean, the answer is it depends. If it's inventory overhang or seasonal effects, you could see stabilization within a quarter. If it's structural, like a price war, weaker tourism, or consumers shifting to unregulated channels, that's longer term and worse for margins. Watch upcoming state sales reports and company inventory disclosures to figure that out.
Okay, let's pivot to policy. There are state bills and also federal hemp rules in play. Give us the rundown.
State-level policy risk is heating up. In Arizona, senators move to criminalize what they call excessive marijuana smoke or odor. That could clash with voter-approved home use rules. Missouri's legislature advanced a ban on intoxicating hemp products, which would align with the federal crackdown on hemp-derived THC. At the federal level, industry groups are pushing back, and some Republican lawmakers are asking for a 2-year delay on a hemp THC ban to avoid abrupt market disruption. So the policy picture is very fluid and could swing market access quickly.
That sounds like a big source of volatility.
Exactly. Policy changes can change shelf availability overnight or create legal fights that keep products on shelves. Investors need to treat regulatory developments as real catalysts, not background noise.
What should listeners be watching when markets reopen on Monday?
Monitor a few things closely. 1. Rhode Island is considering how to award up to 20 new retail licenses. If that happens smoothly by May, it could create local winners. 2. Follow any Senate debate over delaying the federal hemp THC ban. A delay would buy companies time to adjust supply chains and product mixes. 3. Keep an eye on Arizona and Missouri for next steps. Those bills could be amended or face legal challenges. And 4. Watch state monthly sales and inventory disclosures, especially after Michigan's drop, to see whether volumes stabilize.
Which names or sectors do you favor right now?
I would favor diversified players and those with solid Canadian exposure because of the recent retail strength there. Also watch big U.S. operators with strong balance sheets and clear regulatory roadmaps. Sector ETFs will react quickly to headlines, so expect volatility there. Specific companies to watch include Tilray, Curaleaf, Green Thumb Industries, and Trulieve. They're often the first to move on policy news and sales updates.
Short reactions. Interesting.
Right.
Any tactical advice for someone who already holds cannabis stocks?
Be selective and size positions to the uncertainty. Consider overweighting Canadian and multinational names for steadier demand, and keep U.S.-focused positions smaller unless you have high conviction on regulatory paths. Use upcoming catalyst dates, license awards, Senate votes, monthly sales releases, as opportunities to trim or add. And monitor inventory and pricing data closely, because that tells you whether margins are under pressure.
Got it. 2 quick final takeaways.
1. Canada looks resilient right now, so Canadian exposure can be a stabilizer. 2. U.S. state sales and policy remain the main sources of short-term volatility. Watch Michigan, Arizona, Missouri, and the federal hemp THC timeline. 3. Be tactical with position sizes and follow inventory and monthly sales as your earliest warning signs.
Great. Thanks, Josh. If you have questions about anything we discuss, you can ask us directly at stockalpha.ai. We answer listener questions live. And for more market insights, head over to stockalpha.ai. Thanks for listening to Alpha Insights.